The Algos got it all wrong. I'm your host, Steve Van Metre, and thanks for joining me today. The machines are on the wrong side of the market as they've overcommitted to their positions, and now the market is moving in the opposite direction. And this is setting up what we think is potentially one of the biggest opportunities and maybe the opportunity of the year to get in front of these machines. And it's not just one sector of the market they got wrong, it was multiple sectors. And what we're going to see starting next week and going through the next month is one of the biggest machine-driven programs, and this is opportunity for you. We're going to look at what their trigger points are, what their expected buying program is, and we're going to dig into the charts, the technicals, and momentums of these different sectors to show you where we think the opportunity lies. Plus, we have a sponsor for today's show that is a product that's not only good for you, but a chart setup that we think could be great for your portfolio and make a quick 25% move to the upside. Stay tuned to the end of the show for more information. And by the way, thanks for taking the time to support our sponsors. Let's head over to Goldman, where we picked today's story up with the headline of the CTA equity demand is simply the most important chart of the deck. Now, I want, for those of you who don't understand what this machine-driven program is, why we talk about it, and why so many people are interested in it, is because these machines are just trading price and momentum. So if they see the market moving, they're going to play chase. Again, they're trend following, but what's notable is they trade so much money that from time to time, they can either move the market the direction they want, or they can find themselves on the wrong side of the market. And now Goldman is saying, hey, this is a major dislocation because they've got it really wrong. It's a great American barbecue party. They say you don't see us very often. It's a green sweep for the S&P with a potential demand in 6 out of 6 scenarios. And notably, the CTAs are short $38.6 billion worth of equities, and the S&P 500, they're short $25.8 billion. That means they've got to cover this. And over the next week, if the market just goes sideways, that's what you see as this flat tape, they're going to buy $63.9 billion of global equities, with $21.3 billion of that just in the S&P alone. So you're talking about $4 billion a day in demand from the S&P. In an up tape, we're talking $80 billion of global equities and about $25.5 billion in the S&P 500, or about $5 billion a day. So if these machines push the market up on their own, which they can do, they're going to see even more buying behind that. And over the month, it's going to get even better as we see even bigger news that could drive this market a whole lot higher. Now, how did they get into this position? What did they do wrong? Well, that's one of the challenges of moving so much money, is when the market heads down, they start to move to the downside and short, and they push this market, their positioning down, but the market rebounded, and you can see they're at one of their lowest CTA positioning levels in a matter of a couple years. And this is a tremendous opportunity at a time when most people are bearish on the market. And you're hearing that, in the news and from experts, that people have gone to cash, they're worried about this market, and yet here we're about to see the machines do something that they very rarely do, and at a time when we're sitting in the corporate share buyback blackout window that's going to be effectively closed between now and April 28th. And so a lot of people were saying without the corporate buyback machine that the market wasn't going to be able to move, but now these machines are going to come in with some massive buying programs, and then by the time they're done, that blackout window ends, creating again what could be a huge opportunity at a time when the economic data for most people says that this isn't a market they want to be in. But now let's head over to TD Securities, who we note is going to be triggering buying across the board. We're seeing this at all the different places, and from the data we get, we note the CTA positioning in equities on the S&P 500 over 4150. You see it close over that. They're going to buy under 4,000, which right now doesn't seem too likely, barring some really bad news. They are sellers there. So let's take a look at the momentum screens and see what's going on. We'll dig into the charts here and show you what we see, where this is headed. And what I want to note, that our CTA program that mimics those machines already gave you advanced warnings. So subscribers knew. We put an alert out on 3:30 to some of our subscriber lists to say, hey, if you're not in this, now's the time. And we'll show you why we said that. We've got 9 consecutive daily buy signals on our Momentum Timer Pro report, which is looking at multiple technical indicators and bringing them together, because we see the MACD is positive, the RSI is positive, and this is what we want to see in a chart setup. So let's head over here, pull the charts up. Because let's zoom out here, because a lot of people get too close to this, and sometimes you need to zoom out, and you see this beautiful pattern here. You see kind of left shoulder, a head, one right shoulder, a second right shoulder. Notice all this volume here under this second right shoulder, and that was just a catalyst to send prices higher. We note the volume profile line on this 2-year chart is providing a ton of support, saying, look, this has been bought and bought and bought over the last 2 years. Now it's racing higher. Here's your neckline on this pattern. You get above the roughly 416, 417. This thing breaks to the upside, and now we're going to have a video at that point where we're talking about approaching all-time highs. Look at the RSI. This thing is moving higher. Momentum's up. MACD is positive cross, about to cross the zero bound here. It's moving higher. Everything is looking positive from a momentum standpoint. And I want to take a look at tech stocks, the QQQ. Same setup we see on our charts from momentum screens and our CTA report. But now look at this. You see here, this thing came down, tagged the 200-day moving average, didn't hold it the second time, but came in with some volume, which pushed it up, is breaking through the supply zone. And that's telling us that the NASDAQ is looking at kind of an interim high here of around 334 on QQQ, potentially now up to 347. And if you break out of that supply zone, now you're up here at 366 to 370. And remember, these machines have a lot to buy. Now, mind you, it is kind of reaching overbought territory, but as we know, the stocks can hit that and stay overbought for a long period of time. The MACD is just gaining trend here and starting to build some momentum. So it looks to be a lot of opportunity here in these major equity positions and indices, which of course, well, there's one that we're not covering. We told our subscribers of these three, this is the one you want to look at. But let's keep going, because it's not just the equity market these machines have to buy. Well, it's even worse. They've got more of this wrong. Here we have the QQQ, momentum positive, 14 consecutive days on our Momentum Timer Pro. There's our CTA report telling you to get long a little while back. But look at the bond market too. So when we talk about, stocks going up and bonds going up, you have, your 60-40 portfolio that most people invest in. Well, all of a sudden, that's going to get a tailwind too when you check out this buying demand here. On global bond, over 1 week, they've got what they're saying is a green sweep. If bond prices just stay flat, they're still buying about $39 billion in an uptape, a whopping $56 billion over a week. And look at this, over a month, in an uptape, in which I'm going to make the case can happen, is $104 billion. Goldman says, look, why should you care about this? Because they believe that bond prices tend to correlate somewhat with the NASDAQ. And if NASDAQ remains bid, that drives the SPX, and that drives yields down and bond prices up. What are we seeing from TD Securities? Yes, they are looking to cover more of their short positions and then build out to longs, which is what we're expecting. And here we're still seeing, this is still from last week, look for further buying if the 10-year treasury yield falls under 3.3%. That's a key marker here. Now let's look at TLT, because we've got the same upside target at 115. We moved up our downside target to 104. You notice that our CTA positioning is already giving you that advance warning to, hey, this is based on a historical weighting. The links for this are in the description below, so check that out. It was telling you, look, you need to start building some longs here. So was Momentum Timer Pro. We told our subscribers back on 320 to buy this. Now, closing value right now is a little bit lower, but we still like this trade, because let me take a look at this chart here, and you'll see that this is pretty interesting setup as we look at TLT now. And what you can see, again, we have to zoom out because sometimes it just helps bring a little bit better perspective. And we can see the RSI momentum, is building here. It's at 56, so it's moving higher. The MACD was, positive cross, got a little too excited, and kind of now is, flattening out, but still looking to move back up as it stays over the zero bound. But when you look at the charts up, what you see is it's coiling between these two green lines I've added, and it's coiling and coiling. It's sitting right here at its 2-year volume profile. It breaks above this, breaks above the 200-day moving average, and next thing you know, you've got to move to 115, and a lot of computer demand behind this. And you can see here a lot of this right here, these big spikes in volumes, a lot of sellers now flushing out the last of their positions, which we think is happening. And once they get out and we see price break higher, then of course they're going to be forced to cover those shorts and then play chase to the long side on the other end. So now we've seen not just stocks, not just bonds, but how about the energy market? Of course, there was some news just this afternoon that OPEC was slashing production. We'll probably cover that in tomorrow's show. But let's look at the chart setup, because we've been talking about, the setup in the energy sector, and it is phenomenal as well. What we're seeing, of course, is the machines building more longs in WTI. Keep note that over 78 on the WTI contract, you'll see more buying of crude oil. And what does this mean for, the stock value? Well, we think this can head a lot higher. We put out a note, 328, to our subscribers. Buy it open at 79.10. On that morning, we said this is a buying opportunity. Our Momentum Timer Pro report had 4 consecutive daily buy signals. The trigger point was on our CTA report that went from negative to positive on the WTI contract, or it went to short cover, and we said watch the major ETFs follow this higher. Let's take a look at this chart setup, because it looks great as well. So this is a market that, depending on what you like, you almost can't go wrong. And here you can see the trend line. XLE has been chasing this higher 2 years now we're looking at. But what happened right here, this is called a bear trap, where it breaks the trend line, people get bearish, they come and sell positions, they start getting short, and this is really full of buyers driving it up here. And now you're seeing it running this trend line. Again, our first call on this is to the 50-day moving average, and then you're looking at a potential break up to around 90. So you've got multiple opportunities here in the charts, and there's a lot of interest here, broadly speaking, from the market. Now, I know many of you are asking about gold. Well, we've got an update on that. We're not going to look at the charts, but look at this, buying above 2,050 an ounce. But keep in mind, these machines are sitting, really close to max allocations here, so don't look for a lot of upside boost from them. But one thing I think that can give your portfolio some upside boost is our sponsor, the Good Flour Company. And again, they have a product that's good for you, but wait till you see the chart setup. We think that this stock can make a 25% move higher real quick here. And let's take the case here, as they're taking a new approach to flour for everyone. We'll put a link to their investor page in the description and as a pinned comment, along with a link to their investor deck, and put this on your hot list, GFCOF. Again, symbol GFCOF. They're on the OTC. Let's dig a little deeper, just so you understand, what the Good Flour Company is all about, because they're about taking a new approach to flour for everyone. Their product is gluten-free, allergen-free, additive-free, hassle-free. They've got low sodium, low net carbs, high fiber, and contain more phosphorus and potassium than regular wheat. And their superfood-packed alt-wheat flours always deliver on taste and texture. And what they're doing is looking to get people off of wheat. We know if people have allergens to that, they're looking for alternatives. And what you're seeing here is the Good Flour Company's got a fantastic product, well-positioned in that marketplace. Let me share a little bit more about them before we get into the opportunity here. They just announced a partnership with Plant X, where they'll be featured in their stores, along with many other stores and retailers they're already in, so you can find their products. They're widely available. And for good reason. They're dusting the competition in terms of net carbs, fiber, potassium, sodium. They're gluten-free, allergen-free, and xanthan-free, and that's something none of their competitors can say. But from a equity position here, from an opportunity, one thing that we like about stocks is when it has a low float, because if there's a lot of buying that comes in, boy, it can shoot higher. And look at this total public float is 9.2 million shares. So a lot of opportunity potentially sitting here in the Good Flour Company. Again, symbol GFCOF on the OTC. Now let's take a look at some charts, because I want to take the same rules that we use. We're going to look at the momentum, we're going to look at the technicals, because keep in mind, when machines buy, that tends to push, rising tide lifts all ships. So keep that in mind as we look through this here. And now, again, now we're on the daily chart, going back over the last 2 years, just so we can get the biggest perspective we can. Their stock's been trading a little over a year now. And what do we note? That the volume profile line is right around 57 cents, and it closed around 47 cents on Friday. And we think this stock could get up to 60 cents here pretty quick in the short term, and that would be a little over a 25% move. So you'll notice what happened, going back here, we had an oversold condition. The MACD was down, and next thing you know, it bounced off of that. Momentum built on the RSI. Momentum started building on the MACD, but it kind of floundered floundered a little bit, and then it came down and did something we think is really cool. It formed now what says double bottom, but now let's take a look at the 2-hour chart. We get a little more picture here. We have some buying coming in. You see right where we think the stop price is going to get back to, and notably now look what happened. We have oversold conditions on the 2-hour, happened a second time. The MACD kind of trended down, is now starting to break and move higher. We see the share price moving higher, and now let's zoom into the 1-hour chart. Again, this is GFCOF. There we go on the OTC, GFCOF. Again, put this on your hot list, because here you can see, again, coming out of oversold conditions, now momentum's breaking up to the breaking higher. The MACD's got a positive cross. So momentum here is definitely moving to the upside here, again, on Good Flower Company, GFCOF on the OTC. But like any sponsor, again, do your own research. We'll put a link to their website, again, to their investor page, their investor deck. Look at the charts, look at the momentums before you make any decision to buy. But I think what we'll see here pretty quick is a big move to the upside. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. And thanks for supporting our sponsors. Bye now.